Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. And today we are going to discuss the order to cash process or O2C process. Now, in my previous lessons, I talked about the procure to pay process and I also mentioned the order to cash process. And I said that businesses have two sets of processes that they do on a day-to-day basis. One of them is the procure to pay process, which mostly deals with the expenses and purchasing side of things of business. And then also, on the other hand, we have the order to cash side or process that mostly deals with revenue generation of the business. Okay, so today we are going to discuss the order to cash process side of the business. Now, as an Oracle Financials functional consultant, you need to understand the order to cash process. It's very, very, very important to understand this because without this understanding of how the whole process works, there is no way that you can be able to provide the best solution for the client when you're doing an implementation. Okay, so basically what happens is this: when a company is selling something out there to the customers, what will happen is a customer will place an order for that item, for whatever item it is. Okay, so the customer will place an order to the company for whatever item that the customer wants to buy. Okay, this order is placed, that record, that transaction is done in the order management module of the Oracle EBS. Okay, the order is placed and that transaction is entered in the order management module of the Oracle EBS application. Now, what happens next is the item that was placed in the order, it's shipped out to the customer. That item is shipped out to the customer, and to record that transaction is recorded in the order management module as well. All right, so the item shipment transaction is recorded in the order management module. Now, the item will be shipped to the customer, and of course, the customer will receive the item. All right. Now, what happens is the business creates an invoice or a transaction. Okay, the business will create an invoice, okay, or a transaction, and that transaction or invoice is recorded in the accounts receivables module in the Oracle EBS system. So once the item is shipped out, the business will also create a transaction or an invoice and also send that transaction or invoice to the customer. They may send it the same time with the item, or they can send it later, okay? But that transaction is recorded or it's entered in the accounts receivables module, okay, as an invoice or as a transaction, okay, in Oracle terms. Okay, now what happens is when this customer receives the invoice based on the terms of the invoice, let's say for example, the business is requiring the customer to pay, within 30 days or immediately, then the customer will make the necessary payment. Okay, so once that payment is done, that payment is recorded in the Oracle Accounts Receivables module as a receipt. All right, so the customer will send the payment to the business, and that payment will be recorded as a receipt within the Accounts Receivables module of the Oracle EBS application. Okay, now all these transactions, they are sent to the general ledger. Remember, we said that each and every module within the Oracle EBS suite, each and every module talks to each other and they send transactions to the general ledger for financial reporting. Okay, so whatever the receipt and the transaction that were raised in the accounts receivables module would be finally be sent to the general ledger for financial reporting. Also, another thing is the receipt that is received or for the payment from the customer. It's also if the client is using the cash management module, there is a reconciliation that is done within the cash management module. Okay, we've said before that cash management module helps with any reconciliation of payments or accounts. All right, so that one will be done in the cash management module. The reconciliation will be done in the cash management module if the client is implementing the cash management module as well. All right, now the order to cash journal entries that are generated are when the customer places an order and that transaction is entered in the order management module. There is really no journal entry that is created. When a customer places an order and that transaction is entered in the order management module, there is no journal entry that is created by the Oracle EBS system. Okay. Now, as for the item shipment, when that item is shipped, there'll be a transaction that will happen in the Oracle EBS system within the order management module, and there'll be a journal entry that will be tied to that transaction. And that journal entry will be a debit to the cost of goods sold and then a credit to the inventory material. You're basically recognizing that you're taking your inventory out, okay? And then also you're recognizing that there is a cost of goods being sold. And that's why there is a debit to the cost of goods sold account and then a credit to the inventory material. Okay. Now, when you enter a transaction in accounts receivables module, a transaction is also called an invoice. Okay. That transaction will create this journal entry. There will be a debit to the receivables account and then a credit to revenue. Meaning you are recognizing that you have a revenue, okay, but also again you have debtors, you have a receivable, okay, you haven't collected that money yet, although you've recognized that you have a revenue. The business has generated a revenue from the sale of that order that was sent to the customer. Okay. Now another journal entry will be the receipt. Now, this is when you receive the payment from the customer. Okay. Now, if you're using the cash management module, all right, there'll be an entry for that, and the entry will be a debit to the cash or bank clearing. Remember, we talked about these clearing accounts before, and to say that these are usually temporary accounts. All right, and then there'll be a credit to the receivables. Basically, meaning you're offsetting the debit that was there initially, okay, and you're offsetting that with a credit to the same account, the same receivables account. All right. Now, after the reconciliation, the final entry will be the debit to cash or bank, meaning that you're actually recognizing that money is coming into your pocket or your bank account of the business, and then crediting the cash or bank clearing account, which you said is basically a temporary account. All right. So at the end of the day, what we'll have is a debit to cash or bank, meaning that money came into your pocket or money came into your bank account for the business, and then a credit to revenue, meaning you are recognizing that you actually earned a revenue after you did this sale to the customer. All right, so that's pretty much the order to cash process, and I'll see you in my next classes. Thank you.